Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be going over 5 stocks I'm looking to buy January 2019. So if you are brand new to the channel, hit that subscribe button below. If you find this video useful, helpful, hit the thumbs up. And of course, if you have any comments going over the stock market, personal finance, or real estate, let me know in the comment section, and let's go ahead and get into our video. Now, I'm going to be going over 5 stocks. We're going to be covering the ticker symbol, how long they've grown and paid out dividends, a little bit of information over the company, take a look at their current price, where they're at as far as the year goes, earnings per share over the last 4 quarters, where they're expected to go into the future, and just overall 10-year graph and the last year here of information. So that's what we're going to be covering in today's video, going over each one of these stocks. And the first one that we're going to be covering is ticker symbol TROW. This one has been growing and paying out dividends for the past 31 years, so it is a dividend aristocrat. Its name here is Rowe Price. It is one of the largest no-load fund on 401k managers in the United States. It manages direct sold mutual funds, 401k, separate accounts, and advisor sold funds. T. Rowe primarily offers its funds to retail investors in 401k plans, IRAs, and other defined contribution programs. So, financial sector here, they're currently trading at $91.34 when I took this video, the information here. Its market cap $22 billion. It's been trading 52-week range between $84.59. So its current price of $91.34 is fairly close to that 52-week low, and its high price for the year is $127.43. So you can see here the 1-year price change is down $14, or about 13.29% for the year. Now, over the last 4 quarters here on the left-hand side bottom, over the past 4 quarters, they only missed one of their quarters here, coming in just slightly below estimates. But going forward, quarter 4 for 2018 is expected to be more than quarter 4 for 2017. So they should be putting out their estimates here going in very shortly, and then continuing on here into quarter 1 2019. They are going down slightly here. They pulled back slightly. That's something that a lot of companies are currently doing. They're pulling back slightly going into 2019. They're lowering their estimates, and that's why we've had this bit of a pullback here in the market. Now, currently, Bank of America has them at a buy at $108 is their estimated price. Morningstar has them at $120, and CFRA has them at $107. So they're currently trading at $91.34. Now, I like to put in the 10-year graph information here. So in the blue, right in the center bottom, their price is up over the past 10 years, 192%. That puts them at 19.2% on average per year over the past 10 years. In the orange, we have their revenue up 150%, or 15.06% on average per year. In the red, free cash flow up 98.19%. And in the green, their net income up 273%, or 27.3% on average over the past 10 years. So their financials here over a 10-year period look very strong. Now, bottom right corner, I like to go over the last year. So here I included the earnings per share currently and in the future. So current earnings per share for current fiscal year 2018 is expected to be 7.38. In the future, their next fiscal year is expected to go 7.29. So they have decreased slightly off their estimates going into 2019, but this is still a solid company, so that's just something to kind of sit there. Currently, they're paying out 70 cents per share each quarter, and they pay, what is that, 140 and $2.80 per share each year. In the pink, right here bottom right, we can see that their 200-day moving average is $109.84, and they're currently trading at $91.34, putting them below their 200-day moving average, and their current yield sets at 3.07, so very high yield. I believe when I looked at the graph, this is one of their higher yields for the last several years, and forward PE is at 12.38. In the bottom right hand purple, price of sales is 4.2. Financial institution, not a whole lot here. Price of sales, I don't believe that would be very important there, but price to book here at 3.40. So that is T. Rowe there. That is one of the ones I'm looking to add. as an addition in that financial sector. Next, number 2, we have Walgreens, ticker symbol WBA. They have grown and paid out a dividend for the past 42 years. Now, Walgreens, with the completion of Rite Aid Stores acquisition, it is one of the largest global pharmacies with nearly 10,000 stores here within the United States alone. The company operates internationally as well, primarily composed of Boots pharmacies in the United Kingdom and Alliance Healthcare and international wholesaler and distributor of pharmaceutical and medical products in Europe. Now, Walgreens is currently trading at $68.05, has a market cap of $64.2 billion, has a 52-week range, low of $59.07, and a high of $86.31. Year price change, they're down $4.89, or roughly 6.7%. Now, over the past 4 quarters, they meet and exceeded all of their estimates here. You can see for the past year, all of them have been exceeded. Bottom left-hand corner, going into 2019 quarter 2, they're expected to surpass their quarter 2 2018 and continue surpassing into quarter 3 2019. Now, Merrill Lynch, Morningstar, CFRA, all have them either a hold or at an underperform. Their estimates for the stock is around $69, $73, and $74. So all of those positions still are within the range or higher. Now, over the past 10 years here in the blue, their price up 187.7%, or roughly 18.7% on average per year. In the orange, we have the revenue up 120.5, or 12.05% on average per year. And the red, their free cash flow 527%, and in the green we have their net income up 158%, or roughly 15.8% on average per year. So again, very strong financials for another dividend aristocrat. Now, Walgreens has a forward earnings per share of $7 and a current earnings per share of $6.47. So they're looking to increase their forward guidance here by up to 6 cents. 6 earnings per share there. So they're expected to kind of continue forward, as you can see from their quarter 2 and quarter 3 estimates for 2019. They're currently paying out 44 cents per share each quarter, or 44 by 4. That's $1.92, I believe, somewhere in that range per year per share. In the purple, we have their 200-day moving average at $69.73. In the orange, their current price, again, $68.05. So they are trading very slightly below their 200-day moving average. That puts them at a dividend yield right around 2.47 for the current, buying opportunity. Forward PE of 10.51. Now, this is a sales-driven company here. This is Walgreens, huge pharmaceutical company. So price the book here at 2.5. While it's great that they have book value and their price is 2.5, that's still less than 3.0, where those value investors would be looking at. Their price of sales here is actually at 0.495. So very, very low. Below that 1 integer there. So that is Walgreens, again, paying out and growing their dividend for the past 42 years. Very similar to CVS. Those are some of the two that are coming up all the time when individuals are looking to invest in pharmaceuticals. Number 3, we have ADP. This is the automatic data processing. They have grown and paid their dividend for the past 43 years. Strong company. I used to own this one, and Paychex, I wanted to kind of buy back into this one, but this one has been trading at a very high price for quite a while. So it has came slightly off their highs. So ADP is one of the world's largest payroll processor. ADP provides payroll services where that makes up 69% of their revenue. They do co-employment services, 28% of their revenue, and they earn some interest on funds held for clients, and that makes about 3% of their revenue. ADP is currently trading at $129.23. Their market cap is $56.6 billion. Their 52-week range here at $107.61 on the low end. So they're still quite a ways off their lows, and their highs of 153.51. They're quite a bit off their highs. So right now they're sort of in that limbo state. They haven't fallen to the very, near $10 period, $10 difference of their 52-week low, but they're also not trading near their high any longer. 1 year price change, you can see that they are up $11.92, or roughly 10.16%. So this one, it may not seem like a deal, but ADP is one of those great companies. I used to own this one. Everyone uses them for the payroll. I've used them in several of my company's payroll department here to log in. If you guys have and use them, let me know in the comment section below if you guys use ADP for you guys' payroll. Now, over the past 4 quarters, they beat expectations, beating their earnings per share quarter after quarter. Going to quarter 2 2019, they're expected to jump it from 99 cents in 2018 quarter 2 to now $1.18 in quarter 2 2019, and continuing to jump higher into quarter 3 2019 at 171 versus quarter 3 2018 at 152. Now, 10-year change here over the past 10 years, right in the bottom middle, they're up 239.4% for price. That puts them at an average return per year of 23.9%. In the orange, we have revenue at 50%, or roughly 5%, so still over that medium of 2 to 3% of revenue growth. In the red, free cash flow up 23%, and in the green, their net income up 40.85, or roughly 4% on average per year. So this is a very safe. It's a services company. So services base. This would be what was it? Price of sales driven, somewhere in that range. So yeah, we'll cover that here in just a minute. So kind of continuing on here, in the green, earnings per share for next fiscal year is $5.95. Current is 5.26. Now they currently pay out 57 cents per share each quarter. This one raises that very, in pretty good chunks. We'll go over the dividend growth here towards the end when I compare it to the VU. Their 200-day moving average is at $135.20. They're currently trading below their 200-day moving average of $129.23. That gives them a current dividend yield of roughly 2.17%, which is one of the highest points you'd be able to buy them since about a year and a half ago. Their forward PE is at 24.53. I believe it's actually a little bit lower than this, but this is still slightly higher than the S&P 500. So always do a little bit more research as to why it's so high, or if it will drop down in the future as they continue to move into 2019 expectancy for their earnings per share. Now, price to book here, pretty high at 12.09, but again, it's a sales and services driven company. So the price of sales here is at 4.2, which is slightly lower than 12, but still higher than 3.0 range, where value investors would consider it a value. I still think ADP and Paychex are great companies, and of the two, I do prefer ADP to be able to buy back into and hold for the long term, just because that long-term dividend growth. Now, that I believe was number 2 or number 3. Either way, next stock we're going to be covering here is ticker symbol VFC. This is VF Corp. It's been growing and paying out their dividend for the past 45 years. VF Corp, you may know them from North Face, Vans, Wrangler Lee, and so on. So VF Corp is one of the leading apparel wholesaler lifestyle brands, including here North Face, Vans, Wrangler Lee's, Timberland, Dickies, among other brands. They have global products all over the place here. Their segments include outdoor, action sports, 68% of their revenue come in here. Jeanswear makes up 21% of their revenue, and workwear, imagewear creates 9% of their revenue. So this one's just a giant wholesaler of multiple brands that everyone kind of buys and knows. Now, their last price is at $70.57. Their market cap here a little bit lower than all the others besides T. Rowe. It's at $28 billion, 52-week range, lows of $67.18, so it's very close to trading at its 52-week lows. Its highs for the 52-week for the past year is $97. So over the last year, they're roughly down $3.72, or roughly 5% difference here within the last year. Now, over the last 4 quarters, they have met expectations. I believe actually in quarter 3 2018, they may have missed there. I'd have to pull that. It looks like they might be like a small little white line there, showing that they may have missed there, but they're very close there. So maybe 3 out of the 4 past quarters, they did miss there. But going into quarter three 2019, they're expected to raise their forecast here from $1.01 to $1.10, and then quarter four 2018 from 67 to 72 cents. So quarter 2019, they're expected to grow their earnings going into the next fiscal year. So Bank of America has them at a buy right now at expected estimate here, price objective of $105. Morningstar puts them at a hold at $74, and CFRA puts them at a hold at $90. So they are, all those ranges there are still below their expected areas. And of course, in the market here, they're trading very close to their 52-week lows, which I think is reasonable. Now, VF Price in the blue at 430% over the past 10 years. That's an average return of roughly 43% on average per year. You can see between 2015 and 2016-17, they had some pretty rough waters. Now, if you had bought and held during that downturn, you would have got some awesome buying opportunities, and that as they recovered here after 2018, you would have had a peak there of nearly a 60% average return, but they did come off those. So they have dropped very quickly, very fast here, just here in 2018 as of October, November period. So we'll cover that here in just a minute. Now in the orange, revenue up 71% or roughly 7% on average per year. In the red, free cash flow up 136.7 or 13.6%. And in the green, their net income is up 37.7% over the past 10 years or roughly 3.7%. So again, strong financials for a wholesaler here. So I'm sure you guys probably know a couple of the other brands here that they do have, but let's take a look at their one-year graph. So going forward into 2019, they did raise their earnings per share estimates from 3.68 to 4.17. They're currently paying out 51 cents per share each quarter, or roughly $2.04 for the entire year per share. Their 200-day moving average is $83.45. They're currently trading at $70.57. That puts them below their 200-day moving average. Their current dividend yield is 2.68, which is one of their highest points for the past year. If you had bought them just a few, within the last year, you wouldn't have been able to buy them any higher than roughly 2.10, 2.15%. So you're getting a great buying opportunity on this wholesaler if you're looking to get into that area. They are trading at a high PE ratio of roughly 19.15. That's their forward PE. Their price to book here is at 6.70, which is slightly higher. But again, this is a sales-driven company, so you're not looking at price to book. You're looking at price to sales, which is 2.15. So this is below that 3.0 range, where those, it's what's considered a value buying opportunity. So that is VFC. Again, 45 years of dividend growth. All of these stocks are dividend aristocrats that I have had on my watch list, but I haven't had the buying opportunity that I've had going into 2019. That is why they are on this list. And finally, my fifth and last stock here on the list is ticker symbol SYY. This is the Cisco Corp. They have grown and paid out a dividend for the past 47 years. Cisco Corp is one of the largest North American food services distributor with roughly $59 billion in sales just in 2018. It's estimated that 16% of the market share in the U.S. So Cisco, they distribute food and non-food items to more than 425,000 customers globally. 80% of their revenues are here within the United States, 20% from Canada, UK, and other international operations. Now Cisco is currently trading at $62.28, have a market cap of $32.4 billion, and have been trading between the range of $56.01 and $75.98. So they are trading very close to their 52-week low. Their one-year price is positive here at $1.22 or 2%. Now, over the past 4 quarters, I believe they did miss their recent quarter here in quarter 1, 2019. I believe they did miss it slightly, but going into quarter 2, 2019 and quarter 3, 2019, they have raised their estimates here from 66 to 74 and from 67 to now 70. So again, if we look over at the one-year graph, they are expected to go forward from $3.39 to $3.76 per share earnings per share there. So they are guiding higher going forward. Now, Bank of America has them currently at a buy at $75. Morningstar has them at a hold at $58. And CFRA has them at a hold at $65. Now, over the last 10 years, their price is up 176.6%, or roughly 17.6% on average per year. In the orange, their revenue is up 56.43%, or 5.6%. And in the green, their net income is up 37.14%, or roughly 3.7% on average per year. Now again, earnings per share into 2019 is expected to grow from $3.39 to $3.76. So that puts them at a forward PE of roughly 18.3%. They're currently paying out 39 cents per share each quarter. You multiply, say 4 by 4, that's $1.60. Take away the 4 cents. So $1.56 is how much they're paying each share per year. Their 200-day moving average is $67.35, which puts them below. They're currently trading at 62.28, so they are below that 200-day moving average. That puts them at a current dividend yield of roughly 2.31%. They are expected, all of these stocks are expected to raise their dividend here soon, or very shortly, as they haven't raised it here within the last year. So a lot of these stocks are expected to raise their dividend here going into 2019. So again, forward PE at 18.36, price to book 12.27. But again, sales-driven company, consumer goods, services company. This has a price to sales ratio of 0.55. So again, very low, very similar to Walgreens. Very strong companies here, all dividend aristocrats. So that is all 5 of my stocks here. So again, we have T Rowe, ticker symbol TROW, Walgreens, ticker symbol WBA, ADP, Automatic Data Processing, tickers. Yeah, we already covered the ADP. We have VFC Corp and Cisco Systems here, ticker symbol VFC and ticker symbol SYY. Now, when I did a comparison here to the S&P 500, S&P 500 dividend currently pays out for the year. I'm not sure if that's per year or per quarter. I believe that's per quarter. They pay out $1.28 per quarter, or $4.96 per year. They're currently trading below the 200-day moving average at $227.76. Their 200-day moving average is $252.24, and puts them at a dividend yield of roughly 2%. So the majority of the stocks here that we did cover have a higher yield, starting yield, than just investing in the VU. Now here, bottom left-hand side, I put the VU. Their average price that over the past 10 years, so here, the graph, in the orange, their average price, this shows 9.6%, but this is a little bit data, a little bit different. So maybe I actually estimated it. I may have corrected may have typed in the information a little bit incorrect here. But anyways, I had the price recorded here at 11.7% on average over the past 10 years. Their dividend, 12.6. Okay, so their price for VU here, because of the recent sell-off that took place here just recently, as of October, November, December, we actually have an average price for the ticker symbol VU for the S&P 500 of roughly 9.6% on average for the past 10 years. Their dividend growth on average is 12.6%. So when we compare that to T Rowe, their price is up 24.6% on average per year, which beats out the VU. Their dividend yield increase is 18%, which beats out the VU. Walgreens here has a 16% yearly increase on average for the past 10 years, and dividend increase there at 29.1. So again, price and dividend increase beats out the S&P 500. Ticker symbol ADP, or Automatic Data Processing. Price and dividend yield there up 27.7 for the price and 13.9 for the yield for the dividend increase. And ticker symbol VFC there has a price increase there of 49.2%, or dividend increase of 24.5. Now, Cisco Systems here, or Cisco Corp, the food distributor, not the hardware and telecommunications. But Cisco here has a price increase of 17.4%, but their dividend has only increased at an average of 6.25%. So this is the only one that does have a higher price growth. It's faster price-wise than S&P 500, but its dividend hasn't grown as fast as, say, the S&P 500. So that is all I wanted to cover in today's video. I hope you guys did enjoy the video. So again, my number 1 pick was T. Rowe. This is in the financial sector, Walgreens, pharmaceutical, medical, huge distributor of pharmaceutical goods. We have ticker symbol ADP, one of the largest services for payroll, automatic data processing. We have ticker symbol VFC. This is the VF Corp financial. Whoops, what was it? Oh, I'm sorry, wholesaler. I was like, that's not right. So they're the wholesaler with all sorts of Wrangler brands, jeans, North Face, and many others. And ticker symbol SYY. This was Cisco Corp, huge distributor in foods and just giants. I've seen these trucks going everywhere, distributing their food all over the place. So huge distributors, all dividend aristocrats. So let me know in the comment section below, did you enjoy my picks? Did you not? Would you disagree with any of them? And of course, if you are brand new to the channel, hit that subscribe button. If you enjoyed the video, found it useful, hit that thumbs up button below. If you have any comments, questions going over the video, if you have your own suggestions for January 2019, let me know in the comment section below. I always enjoy listening and replying to all of you guys. And I was trying to wrap this video up as quickly as I could. I'm sorry. It is 3:30 in the morning. I'm going to be jetting out. I will catch you guys later. Have a great day. Bye.